What's up, everybody? Stock Sniper Alex, and I'm back with another tip of the week. Today I just want to talk to you guys about how to calculate risk versus reward and what is an ideal trade to get into. I'm going to show you guys a stock that we're looking at and how we calculate our risk and then our potential reward when we're actually getting into the trade. This is KSHB. We're watching an OTC penny stock that has a first green day. It's up 12%. It's on the radar. It had a news catalyst this morning. It's trading about average volume, but that's all on the checklist for the first green day. The next thing we want to do is calculate our risk and reward. Realistically, before you want to calculate how much you're going to actually make on the stock, you want to calculate how much you're actually going to lose. Once you get in the stock, you don't want to get in a scenario where it starts going down and you have no idea what you want to do with it. So you want to create this plan prior to actually getting in the stock. You want to base your risk level, how much you're willing to lose, off of the daily support line. You can see the purple line, usually how it lines up. If it's a bullish stock, if it's looking green on the day and has potential to go higher, it'll be hanging above that purple line. Usually that is a great spot to start with a risk level. So right now it's sitting at 170 and the stock is at 174. So right away when you're watching it throughout the day, you always want to check back to know, all right, well, if 170 is the spot, that's the spot that it needs to hold. And then you want to calculate, all right, well, if I buy the high of the day, if I'm going to buy it when the volume is coming in and it's pushing past high of the day, I want to know how far that is from the actual risk level where there was solid buying. Today there's been solid buying since about 11. It's held above 170 the whole time. Once you see that confirmation of solid buying, it's holding above VWAP, and you see volume coming in at the right time of the day in the last hour of the day. It's a pretty good setup, but you want to calculate beforehand. If you're buying at 175, which is the high of the day, and you're risking off 170, which is the VWAP support, daily support level, you're risking about 3%. That's ideal. Getting in at 175 and you're risking at 170, that's 3% of your money. So you put in $1,000, that's $30 that you're risking. Now that you've calculated how much you're going to risk, you want to calculate how much potential for when the stock actually goes to plan and goes high. A rule of thumb for us that we always stick by is risk reward. For us, we'd like to see 3 to 1 or 4 to 1. What I mean by that is if we're risking 3% in this scenario here, buying at 170 and having our cut point at 170, we're going to do 3 times more than what we're risking there. If we're only risking 5 cents from 175 down to 170, we're going to do 3 times that, so our reward will be a 15-cent move. We're looking for a move for this stock to go up to $1.90 or a $2 range would be an ideal spot for you to take profits. We're not going to enter a trade if we don't see the potential to make 3 times more to the upside than we do to the downside. I'll give you an example. If this stock had a range today where it was trading up to $1.80 and the support was still at $1.70, if we bought higher, if we bought at like 178 or 180, the range from the actual support to that entry point, your entry point, holds a little bit more risk. So instead of risking 3%, we would be risking 5 to 7% on our trade, and only making 15 cents to the upside makes it only a 2 to 1 instead of a 3 or a 4 to 1. It's not that high of a probability that you're actually going to come out with a good amount of money here. And that's the only way we really enter these trades, is if we know for sure that we have a great chance to actually make 3 times more than we potentially could lose overnight or in the same day. You just want to really calculate these beforehand, or you enter the trade, know how much you're willing to risk, and if it goes past it, if it goes higher, it's okay. Be patient and know that you want to have as minimal as a risk as possible. So getting as close to that line, like right now you see the bids coming down to 170, maybe we get at 170 and only risk 1 penny. Risking one penny and the possibility of making 15 cents to 20 cents on our share, that's 10 to 1, 20 to 1, which is amazing. Where else do you get those odds? Just respect the risk, calculate the risk before you calculate any type of reward. Once you find the winning plays, once they hit their goals, take the profits. Hope you guys enjoyed this video. Check us out on YouTube, all our other videos. I'm doing a tip every single week. Throw some comments, let me know how I'm doing. I'll see you guys next week. Happy Thanksgiving.